Hi everyone, welcome to this morning's webinar on essential tax tips for small business owners in the UK. I'm Grace Douglas, part of the marketing team here at Prosper². Prosper² is the UK's leading rewards programme and business club for SMEs. I'm delighted to introduce Karen Pearson. Hi Karen.
Good morning all.
Karen heads up the team at Jackson & Green Accountants in Portsmouth, who has years of experience as a practitioner. She also taught accountancy and has a background in sales and marketing. You may also spot throughout the chat box of this morning's webinar, Sarah Jane Lewis. Sarah Jane is a tax specialist with a background in HMRC and is also part of the team at Jackson & Green. Sarah Jane will be on hand to answer any of your questions throughout the session, so please do pop any questions in there, ensuring you have attendees and panelists selected so everyone can see your comments and questions. Tax is quite a complex and sometimes overwhelming topic, so hang tight, ask away, and after the webinar we will be emailing over you a recording of this morning's session, as well as a little goodie bag with some must-know information as we head into the new year. Just as a little disclaimer, today's webinar is intended to give you practical help and information as a business owner in the UK. If you have any further questions or concerns regarding any of the topics discussed this morning, we advise you to either get in touch with Jackson & Green, speak to your accountant, or get in touch with HMRC, as we will accept no responsibility for any financial loss incurred. So as we near to the Christmas break and New Year, are there any things, Karen, that we as small business owners need to be wary of?
There most certainly are, Grace, and good morning to everyone. And before I do start, if I can just have a quick little moment on your chat box, please do fire all those questions to Sarah Jane. But if they are personal to you, or perhaps they're a bit long-winded, or they're not relevant to this morning, if you can let Grace know or I know, we'll answer that at a different time for you. But Grace, back to your question, yes, it's a tricky time of year, and it's always the March 31st year-end clients that I'm really concentrating on this time of year, because it's a perfect storm for them. They've got to get their accounts in and their corporation tax paid by Christmas. They're coming to an end of another VAT period. Okay, we don't have Brexit this year, but we've still got all the challenges of COVID in place. And the first thing that I can guarantee will be on everyone's lips is, I can't pay all my taxes. So the point is, what do you do at this point in time? Because if you stick your head in the sand, it will get worse. HMRC have got dedicated lines waiting for you to call. So I think let's kick off this morning with some practical help. Pens at the ready. I've got a telephone number for you. If you can't pay your PAYE, your VAT, or your corporation tax, the telephone number that you need is 0300 200 3835. So that's 0300 200 3835, and that will be going out on your handout, Grace, so that everyone has got it later. Now, let's talk about payment plans. 6 months ago, 12 months ago, I would have been getting very excited if my clients had come back to me and said they've got a 6-month payment plan. We've discovered that you're going to get a much better outcome if you make that telephone call with your accountant or your tax advisor. Gives it a bit more gravitas. Let's face it, we've been doing it for years. We know how to structure a conversation. We know how to get the best out of the HMRC agent that you're talking to. So my advice would be, okay, if you've done it before and you only want a few months, plow on, ring that number and talk to them. They're going to be there Monday to Friday, 8 o'clock in the morning until 4 o'clock. They're not on extended hours at the present time. But if you're a little bit unsure, not quite certain how to phrase it, then please get hold of your accountant, go into their offices and make that phone call together. And I'll tell you why it's made a difference. I had a client come in with me last Friday afternoon. We rang HMRC together. They've already got a payment plan for VAT, can't pay their PAYE, owe £20,000. We managed to get a 20-month payment plan. That's unheard of. So, there is help out there. Don't panic. You can make a difference and then be able to sleep at night. So, Grace, I think that's the first thing that people should be doing. Don't put your head in the sand if you do owe HMRC taxes. So that's number one. Let's talk about those companies who have done everything they need to, paid off all their debts to HMRC and gone, do you know what? I just can't do this any longer. I need to close my company. And let's make this really clear, Grace. This isn't about the clients who owe shed loads of tax to HMRC and are trying to get their company closed under the radar. This is for people who've done everything by the book. They've had a bounce back loan, because this is really crucial, paid off that bounce back loan, put the company's house paperwork through, and for some strange reason, company's house have gone, we're not going to close your company. What do you do? Well, the first thing you've got to do is establish what's the problem, because if you've done everything, there should not be an objection. Now, we had this again a couple of times last week and the week before. No good reason why their companies can't be closed. You can find out. So the director or the company secretary must email Companies House. The accountant can't do it for you. It's inquiries@companieshouse.gov.uk. So inquiries@companieshouse.gov.uk. Ask them why, they'll send it back. Now, it will probably be because your bounce back loan hasn't been closed properly. The banks are inundated with queries on this at the present time, and we all know it's going to take a little bit longer than normal to get things through the system. So if for whatever reason, if they haven't completed their paperwork, then it will be, and I always get this wrong, so I'm going to have to read my notes. It's the BEIS, which is the Business Energy and Industrial Strategies Department, that will stop your company from being closed. So talk to your bank, get them to put through the paperwork again, make sure it's sorted. Companies House do a review every month anyway, so they will pick you up on their next month's checks and will then push the company to closure through. Okay, what happens if they don't? If it still gets held up by the banks, then you can email inquiries@beis.gov.uk, tell them what the problem is, and then they'll take it up on your behalf. The accountant can't do anything, Companies House can't do anything. But again, another practical thing, Grace, that people can be taking away from this morning. Other things that companies need to be thinking about, okay, losses. There are new concessionary losses in place for both individuals and for companies at the moment. Normally, if you got to the end of your 31st of March year end and you had losses this year, but you had profits in the preceding 3 years or one of those, normally you can only go back 1 year and then forward indefinitely. As a COVID concession, they're going, do you know what? Let's treat you as if you're going to close your business. Let's go back 3 years. Now, that could be a complete lifeline. People don't necessarily know this concession's out there at the present time. So if you've got losses, make sure that that's reported through the corporation tax process this year. Get your accountant to take it back, grab that tax that you paid previously and get it paid forward. They're not quick giving you the money back, but it will come back in the not too distant future. Last thing is grants. There are still grants out there. Now, one of my clients brought to my attention a couple of weeks ago that the Portsmouth area, through local governments, were giving out a new resilience grant. It's available for application up to the end of January. £10,000 up for grabs for a whole raft of reasons. You've got to be that hospitality, retail, culture, travel industry that is still so badly stricken by COVID. But have a look on your own local authority website. It might be called something else in your area, I don't know. But if Portsmouth are giving it away, I bet the rest of them are as well. So please do make sure that you've got a chunk of that. As I said, that's £1,000 to £10,000, could come in really handy. Yes, it's taxable, get over it. All these grants are, sadly, but you know, if it's 10,000, you're still left with over 8k in the bank by the time you've allowed to pay your corporation tax next year. So yes, you know, the main thing is please don't stick your head in the sand, get help, talk to your accountant, talk to HMRC. They will try and work with you whenever they possibly can do, Grace.
And with that, have there been any changes for sole traders and personal tax clients?
Not so much. Yeah, not so much. You know, they've still got to pay their taxes by the end of Jan. I suppose let's talk about what happened if you can't pay your personal tax by the end of January. Another telephone number for you. It's different to the last one. So if you don't think you can pay your personal tax bill in full by the 31st of January, I want you talking to the self-assessment payment support line, and that is 0300 200 3822. So 0300 200 3822. Same hours, Monday to Friday, 8 till 4. Do call them. To be honest with you, if you start calling them now, they'll probably go, it's a bit too early because the tax isn't due until the end of Jan. And their argument would be, well, how do you know you can't pay us by then? So Grace, I think realistically, you probably need to get towards the middle of January before you start making those payments. If you go onto the website, they do make a big deal of you making up a payment plan by yourself and actually setting it up online. I am fairly certain that we're out of that window of opportunity. I'm sure there's a 60-day caveat that says if your tax is due within this period in time, you've got to speak to a human. So I think let's do that, get them talking to their helplines. They've got loads of people on these now, so you should be able to get through. Wait times are quite long though, so just be prepared for that. For this tax return, of course, we're reporting to the 5th of April 2021. Do make sure that if you had any of the first three SEISS self-employment grants, that you are reporting those through. If you even received the fourth one a little bit early and cash flow wise it was received into your bank before the 5th of April, you can't put it onto your return. That's got to go on to the next year one. So the 4th and the 5th will hit then. Let's be absolutely honest, some of you have already said to me that, oops, I'm not entirely certain whether or not I should have maybe gone for the second one or the third one. If in hindsight, you genuinely believe you made a bit of a mistake, perhaps you're a little bit greedy and you think, not sure I should have had that, then call HMRC. You don't want to be looking over your shoulder for the X number of 6 years to come, wondering if you're going to get an investigation because your figures just don't stack up. So do the decent thing, give them a call if you think you need to report it. There are boxes on this year's tax return if you think that maybe you should not have had it. That's your call. We can't make that call for you. We can only run the maths and go, raised eyebrow, maybe we should look at this. But, you know, take it to HMRC early if you think you've got a problem there. Always better to do that. Other things to think about if you do your own self-assessment tax return, and many of you do, let's face it, you get your accountants to do the actual work for the limited company, your sole trader, your rental accounts or whatever, but some of you still choose to do your tax return. That's absolutely fine. One word on mortgage interest for this year. So historically, if you were doing rental accounts and you had mortgage interest, you'd take your rental income, you'd add in all your expenses, including what would be your mortgage interest, and you would have your profit figure at the end there. Now that was great if you were a 40% taxpayer or higher, because you were getting tax relief on that mortgage charge at the full rate of your underlying rate. Now they've gone, it's not really fair, is it? We've got 20% taxpayers who are only getting mortgage relief at 20%. If you're a 40% or a 45%, you're getting an unfair advantage to enable you to grow your portfolio. So there's been a complete change in the past 4 or 5 years to try and make some sort of parity for everybody. So when you're doing your tax return this year, remember you've got to add in or add back all of your costs, completely disregard it when you're getting your profit figure. And then there's other boxes further down the line in your tax return to basically disclose how much mortgage interest you paid, because at that point you'll only get it at 20%. Big sea change, Grace, and people are getting that one slightly wrong. So we need to definitely draw that one to people's attention. I think the last thing to do with personal tax would be what happens if you sell a rental property. Now, beforehand, last year, before April, if you sold it, fair enough, we would just do it within your tax return at the end of the year. HMRC are very wary of the fact that people sell their properties, and by the time we get to the following January, they haven't got the money left in the bank account to pay the capital gains tax of the arising on the gains. So they've gone, look, initially you had 30 days to disclose the sale and to make the tax payment. So if you sold a property, and I think it goes up until about the 26th, 27th of October this year, you had 30 days to disclose and pay everything over. Since the 27th of October, they've got a little bit more lenient. They've realised 30 days was a bit of an ask. So we're now going for 60 days, but it's still catching people out. So just be aware that there are changes on that.
And HMRC have announced several changes from April next year. What should we all be looking out for? Okay,
so I think you're referring to the increase of this 1.25%, aren't you, Grace? Taxes. We all knew that COVID was going to come at a cost. We're starting to see it already. So come April, the underlying rate of taxes for most people are going to rise by 1.25%. And that doesn't matter if you're a sole trader, if you're a director. Now, directors are going to hate this because it means that their 7.5% tax rate, if they're a standard rate taxpayer for their dividends, is going to go up by 1.25%. If you're a high, everything basically just chugs up by that percentage. They're calling it one thing for this next tax year, and then it gets wrapped into everything else after that. Important point, if you are post sort of retirement age and you're still working, up until now, you've not made any national insurance contributions, you will be caught by this 1.25%. So if you think, oh, that doesn't really apply to me, national insurance is not something I've got to worry about, do you know what? This could come back and bite you, even if you are of a certain age. Things to think about are, if you are a standard rate taxpayer, in the year that we're currently in, so up until the 5th of April, your total income is going to keep you under that sort of 50,000 benchmark. You've got to think long and hard as to whether or not it's in your best interest to declare a dividend if you are a director of a small business and pay the tax maybe January 2023, whilst you can still secure it at the 7.5%. Now, you've obviously got to have profits to be able to do this. You've got to have a balance sheet that's got reserves that can be distributed. But I think I would be looking now at all of my companies who have got balance sheet reserves on their dividends, if you like, that haven't yet been paid, and where directors or shareholders could take it early to avoid to have a later cost later on down the line. It is difficult. It means that come January 23, your tax bill is going to be higher than it should be. But just think, you know, you're going to save yourself a little bit of tax going forward if you can at least elect early and get those dividends in there. And something else on that, Grace, as well, of course, is it's going to affect employers. Now, at the moment, if you're an employer, you're paying 13.8% employers' national insurance. I hate to tell you this, but it's going to 15.05% from April. Now, that's a big hike for small businesses. Now, we get our £4,000 employment allowance. We know that doesn't go very far. So when you're thinking about taking people on, you've got to have an idea of what this on cost is going to be before you can go anywhere. So, you know, 15%, that sounds an awful lot to me, 15.05 in fact. So we have to think about those things. What can you do about it? Okay. I think we need to start looking at structures of business. Many companies will work on a part-time complement of staff because they keep them underneath the national insurance thing. If it works for you, and only if, maybe it's something that you should be looking at. I don't like ever saying that you should employ people because of age, but obviously cheaper people are younger people. Doesn't fit all businesses, and it certainly shouldn't be something that you're doing just because you want to save some money. But if it suits your business model, then you might find shorter working hours and younger people may help you if you're trying to balance all the different things that you have to pay at the present time. Other practical help. Let's start thinking about if you are going to have a loss for April. Now, we've already talked about the fact, Grace, that there is this current dispensation, lasts only 2 years, by the way, whereby you can take back your losses for 3 years rather than the usual one, then they go forward. Something that doesn't really happen, and I think we should pay more attention to it, is the fact that if you know come March, most people's year end is going to be March going into April, that your company or your sole trader activity is going to run at a loss, you can actually stick in a tax return with, and I'm not going to call them best guess figures, they've got to be as robust as they can be, to trigger a tax return. And then when you've got time with your client to be able to go through it properly, you put in an amended one. That's there in black and white in guidance for HMRC. They want people to access their losses as early as they possibly can to enable them to have the cash flow, to be able to do all the things they need to do to grow their business, to take them out of a loss and back into a profit-making situation. So if that's not even on your radar, talk to your accountants. You're going to know now what your business is looking like going into the early part of next year. So if it's something that has to be discussed, make sure you've got a date in the diary for February, March time so you can get in and work out what your strategy is going to be. CIS, Construction Industry Scheme, Grace, for those clients who work within construction or with around it, they have money taken off them in year. And it's a bit like a savings pot. We go, don't worry about it. If they're taking 20% off you, the people that you're working for month in, month out, by the time you get to actually pay your corporation tax next year, HMRC has got a nice little savings pot for you, and it will probably pay off your corporation tax, maybe a bit of your VAT, possibly a bit of your personal tax. It stops you having to worry about it at the back end. People don't always realise that you can get an offset request in really early, and you don't have to offset. So come the 6th of April, if you've got all of your contractor statements and you can prove that HMRC have taken XYZ off you, your accountant can go in and basically online put in a request that says, this limited company had XYZ suffered last year, money taken off them. Can they please have that back? Get into that queue nice and early. Now, we run one of two things at Jackson & Green, because I've got some clients who go, do you know what, can you just offset that against the other taxes I'm going to have to pay? And I've got others that go, Karen, I need that money quick. Can you get that request in? Maybe middle of April, I'll give you all the paperwork. I've got £30,000 sat there. Can I have it back? It means that I can pay other things in the short term. So I think, Grace, we need to be quicker at reacting. We need to think about what actually HMRC has got within their normal mechanism to enable people to help themselves. And these sorts of things will go a long way to help the cash flow situation.
I mean, there was news that HMRC has shaken up VAT from April with regards to their penalty regime. What will happen to business owners if they don't pay on time?
It's not just VAT. HMRC have been looking for many years now at the different ways that they penalise people for all the different types of taxes they've got. And they've really got quite a different approach, depending if you're talking about personal tax, VAT, PAYE, corporation tax, you name it. All of these departments have always worked quite autonomously, and they've sort of evolved over time to have different ways of handling clients if they don't do what they want. It's not just paying the tax over, it's actually getting the information to them in the first place. So over the next couple of years, we're going to see a complete game change by HMRC, where they're going to try and put together some sort of a cohesive approach that goes, do you know what, it doesn't matter what tax it is, we've got a very similar approach for you. Now, they're starting off with VAT, then they're moving to income tax, and it will be on a points-based system. So, you'll be given a number of points that you can, a bit like driving license, I suppose, that when you get to a certain level, something's going to happen to you and you'll get a fine, say £200. And a bit like points on a license, they'll sit there and they'll eventually go off. What I'm not going to do is go into a great big spiel about that now, because God, it could take an hour, to be honest with you. But there's an awful lot of information out there. If you are already a client who is VAT and you're using software, you will see on the QuickBooks and Sage and the rest of them that we've got loads and loads of information to be able to access on that. But I'm going to leave that there, Grace, because I'm very conscious of the time that I can talk forever. So you've got more questions for me.
Yeah. If you were working with a sole trader, what would you be doing to prepare them for April 2024? Because it's something to do with making tax digital and mandatory for individuals. Is it over the income of £10,000?
It is. So if you're a sole trader, or if you've got rental income, this is really important, and your gross income, forget your expenses, top line figure is £10,000 or more, come April 2024, you're going to be doing 3 monthly digital reporting to HMRC. Should have been 2023, but they've gone, we're really not interested at the moment, far too much going on, we'll give you another month. You have to be talking to your accountants, because if you have always done everything manually and you are now going to have to go to some sort of digital platform, then you're going to need help. We started moving ours well over 12 months ago, and I've got them staggered all the way through to 2024, because you can't have everyone doing this at once. So if you haven't heard anything from your accountant on this, and this has gone, wow, didn't know this, Karen, then please make that phone call. You're going to need to be able to embrace technology. Top tip on this would be, get yourself a dedicated business bank account. because what you don't want is the rest of your world in with it, because it just won't work. And then we should be looking at the different types of software that can work with it. Now, I'm going to just mention one combination here, because my job to you today is to point you in the right direction of things. There are many software companies out there. There are many banks out there. So I'm not saying one is better than the other. But if you haven't yet heard of Metal and FreeAgent, go and look it up. Metal is HMRC's challenger bank. So we're talking the people like the Starlings of the world, the Tides of the world. Metal is for people who do most of their banking online. They're not cash people. But if you have Metal, which is basically underneath the big NatWest umbrella, their other offering, which I think is really got to be looked at, is FreeAgent. Think of your big ones, your QuickBooks, your Sages, your Xeros. FreeAgent is a challenger, doesn't have all the functionality that these guys have, but for most of you, it's going to do exactly what you need it to do. Why am I highlighting these two? Metal comes with free banking for life, other than a few terms and conditions. FreeAgent also comes, if you've got a Metal account, completely free for life. Now you think about it, QuickBooks can cost you up to £30 a month, as does all the rest of them. You times that out for a little sole trader who's got one rental property and has to get some sort of digital solution. It's going to save them a fortune. As I said, can't recommend it, but I'm bringing it to your attention to go and find out a little bit more about it. But talk to your accountants, definitely.
And I saw in the news last week that the government announced that, is it 3 in 10 people are now working from home at least one day a week? Yeah. Have HMRC introduced anything in relation to the difference in working?
You know what, Grace, they've not really done anything new. I think most people now are very aware of their £6 that they can have. But is there anything really there for them? No, there's not. You know, the employers should be making sure that they've given them the technology. And going back to this grant that local governments are now pushing, part of that grant can be spent on people having to work from home and be able to access computer equipment and technology to enable them to do that. So they're not saying make your staff work at home, you the small business person is going to have to pay for it. They are trying to support that. But no, do you know what, you're going, if you're a sole trader and you're having to work more from home than you could, there's a simplified expenses regime whereby you can claim £10, £18, I think it's £26 per month, depending on how many hours you work there, or it can be done on exact costs. But there's not a vast amount of help. One thing to be wary of, capital gains tax. Don't go building structures in your back garden for business use unless you've taken proper advice first of all, because when you go to sell that house, you might have a nasty shock when it comes to tax.
I think we'll be seeing with a lot of people might have done that over the past year or so, you know, the odd garage in the back or the shed. Yeah, we are seeing more and more electric vehicles as well on the roads. And there was a rumour that HMRC were providing some form of tax relief for businesses if they had like electric vehicles within their business operations. Is this true at all, or how true is this?
You know, Grace, the tax breaks are phenomenal. They really are. But you've got to be in the position whereby you can go and buy a brand new vehicle. And not everyone's going to be able to do that. So, you know, it's awful, isn't it? Here's your carrot, but you've got to go and spend vast amounts of cash to get there. Yes, so as we all know, if you're the director of a limited company and you've got yourself a company car, it's a benefit in kind. Going to cost you shed loads when it comes to personal tax. Most people go, I really don't want that. I'll use my own car and I'll just claim the business for the mileage that I have. If it's vans, well, the personal usage of that is negligible in comparison, and you can of course put all the costs through the business. HMRC and the government are absolutely committed to getting us to reduce our carbon footprint and to get us to go as green as we possibly can. So you're right, you know, if you now as a business buy a company car and the director's allowed to use it, then there are all sorts of tax breaks. You know, you're going to get 100% first year allowance when it comes to corporation tax. The director pays 1% of the, or it's actually 20, their underlying rate of 1% tax charge on the list price of that vehicle. Now that will include, because there's no fuel, so there's no fuel benefit to have to worry about. We're talking about a couple of £100 worth for a director to be able to drive a £50,000 electric vehicle. Downside, the company had to buy it in the first place. But yes, you know, fantastic rates they're available at the moment. Grace, brand new vehicles only. If you can buy a brand new electric van, completely free of charge to the director to use. So yes, got to be encouraged, but it comes at a cost.
Right. And especially coming up to Christmas, staff might want to reward their owners might want to reward their staff. I mean, letting managers definitely know how to reward their staff. What level can a business owner go to still be within the boundaries of kind of rewarding?
They're not very generous, to be absolutely honest with you. HMRC will allow a business owner to spend £150 on a member of staff per year before something becomes a benefit in kind. Now, for some small businesses, that's a big spend anyway. But for other businesses who are perhaps in a position whereby they can reward their staff with a little bit more, they really are quite tied. And remember, this isn't a £150 spend in the summer and then £150 spend at Christmas and I'm going to give them a voucher for their Christmas present as well. This is £150 over the whole 12-month period. On the help sheet that we're going to send out, Grace, there is actually a link there to the HMRC guidance, because you do need to look at it and consider what you want to do, because what you don't want to do is to lumber your staff with a tax charge as benefit in kind at the end of it. So yes, we all want staff to be rewarded. You know, I think it's a bit mean actually, £150. I think they should at least double that, because what you get for £150 these days, not an awful lot. But you know, terms and conditions apply, so do make sure that you're reading that small print.
Thank you. I'm just checking out the chat box here. There is a couple of very specific questions. So I've seen Sarah Jane has popped your email address in and hers as well. So if there is some specific questions, please send them in to Karen or Sarah Jane, because they will email you back. I'm conscious of time, so should we do maybe a summary question, maybe top 3 tips going into the new year, maybe?
Yeah, I think the first thing is, if you owe tax, do something about it. You don't want brown envelopes arriving all the time. So you've got those 2 phone numbers. Let me just remind you what they were. If it is VAT, corporation tax or PAYE, you should be calling 0300 200 3835. If it's personal tax and you don't have a tax plan already in place, then you should be calling 0300 200 3822. Look at your losses. Plan for April. The handout that you're going to send out, Grace, 10 pages of top tips of all the things that I think you should be thinking about, be you a sole trader, a partnership, a limited company, running into the end of this fiscal year on the 5th of April 2022. And if you read that, it will just provoke a few questions. Chat to your accountants. And I can't stress enough, don't try and do any of this by yourself with payments for HMRC. Do talk to the specialists, call your accountants, book in, go and see them.
Mm-hmm. We had a question earlier about because making tax digital is becoming mandatory, that some people don't have accountants. Do you think that would you encourage one, or would you encourage?
Even if you do what we all do in life, you use an accountant for a couple of years and go, okay, I can see how this works now. I can do it myself. Do it. But I can guarantee you, once you've got an accountant and you see the value added that they can bring to your life, actually stay with them anyway.
And like Karen said earlier, everyone, we will be sending out help sheets, 10 pages. It's like a little goodie bag for you all, along with the recording of today's session as well. So if like I say, please send in your questions, because Karen and Sarah Jane will be are on hand to help you there. So I am conscious of time, so I think it's time to wrap up today. Thank you so much, Karen and Sarah Jane, for today's session. Your expertise and advice have been completely invaluable. So and I hope everyone can take at least something away from today's session. And thank you all for attending today and asking your questions and comments. If you have any feedback or want to keep up to date with any of Prosper²'s webinars for next year, please follow us on our social media. So yeah, that's it for today. I hope you all enjoyed. Keep an eye out for those goodie bags on your emails and for the recording. And other than that, from all of us at Prosper², we hope you all have a brilliant Christmas and hopefully take a well-earned rest to spend time with your loved ones, and hopefully see you all in the new year for a brand new webinar programme. So bye everyone. Thank you, Karen and Sarah Jane, for today. See you later.
Bye everyone.
Thanks.